Welcome back to another Millennial in Debt video. If you are new here, hit that subscription button below and turn on the notification bell so you get every single time I upload a video. And you want to head over to the Instagrams over here. That's where all the good fun happens and all the announcements. Like, I am now offering individual financial coaching where you can sign up to my mailing list and you'll be the first to know when the calendar opens on a monthly basis so you can book your one-on-one with your girl, Whitney. It'll be a good time. I'm feeling very festive, although this video will probably come out after the holidays, but I've got my little antlers on, and my favorite movie, Merry Christmas, You Filthy Animal, Home Alone, a classic, but that's enough about me. All right, so let's get right into Robo Advisors. So they've kind of been sweeping the nation, or sweeping the investment world, I should say, because they're a really good opportunity for you to get into investing, get your feet wet without, having to know all the ins and outs of the market and things like that. What a robo-advisor is, essentially what it sounds like, is they keep your fees low and they act as your fiduciary. So they interest in your money and they kind of teach you where it should go and help you invest without having really high fees. And the reason they're able to keep the fees so low is because it's not an active live person, right? And not a broker actually doing the investing for you. So it's more automated. So I'm going to jump right into some of the companies or the brokerages that I really like that I think are very helpful for people just getting into investing. So the first is Betterment. So Betterment was one of the real big leaders in the robo-advisor world, and I really like the fact that they not only just act as your fiduciary, but they offer so much insight into, what an index fund is, what an ETF is, what you should be investing if you want to retire by 20, maybe you want to retire by 20, or in 20 years, or how much money you should be putting in. So they really help walk you through and guide you through the process and make it super simple and easy, which I think is very beneficial when you're just starting out and learning, because you don't want someone trying to scam you out of your money. And so Betterment does have a 25% commission. So it's fairly low compared in the market. And then they do offer a 40% option. So it depends on the balance you have. So you do have choices. What I like is that it's a zero minimum to start. So you can start off investing with as little as $25 and you're learning in the process, and you can do, index funds and ETFs and not worry about too much volatility, especially if you're trying to become more a long-term investor. The second robo-advisor that we're going to be talking about is Sophie. So Sophie also has a zero minimum to start off. And what I really like about Sophie is they're so big on education that they're offering you, not an advisor, but a free educational guru in the stock market. And they also offer free career counseling, which I think is pretty dope with them. I like establishments that really, they're trying to make you a better financial person and not just trying to take your money and just scam you. So big ups for Sophie. So Fidelity offers free management, zero fees, up to $10,000. So as long as you have under $10,000 invested, you won't be paying any fees to Fidelity. They are one of the stronger robo-advisors. They're all digital, so there won't be too much human support, essentially, like the other two might have if you do customer service or call for help. So Fidelity is way more virtual. Like you're really just gonna have to read, watch videos, and learn on your own. But I like the fact that it's zero fees, zero minimum balance to start off. So up until $10,000, you just making money, baby. I mean, of course, there's also expense ratios and things like that, but we're not getting into that in this video. The next is Ally. I think it's Ally. I struggle with the name of this bank every single time. Now, I really like Ally because they give you a plethora of things in this one particular app or one particular website. So you can open a high yield savings with Ally, which I think they're offering a 0.5% interest rate right now, which I know you're just ugh, who cares? That's pretty good right now for the way the money world is looking. So they offer high yield savings, and they also offer a robo investment opportunity or option. You do have to have a $100 minimum to open an investment account. It's zero fees with a cash enhanced managed portfolio. And if you don't have that particular portfolio, then it will be 0.3%, which is not so bad. It's I think it's pennies. The fees aren't so terrible when you think about the amount of growth that you're gaining long term. Now, TD Ameritrade. I got some feelings about them. I like TD Ameritrade because they offer you socially responsible investing, which not many brokerages, whether robo-advisor or not, are doing. So shout out to them for that. TD Ameritrade is not as accessible for new investors because they do require a $5,000 minimum in order to participate in their Robo Advisement. But if you do set up a recurring deposit with them of $500 or more, then that minimum is waived. And so if you want to open up a Roth IRA with them, the max amount of money you could put into a Roth IRA for the 2021 fiscal year is $6,000. So $500 a month would make you hit that max out, and then also would have you avoid the minimum $5,000 balance, because it's like, what if I don't have $5,000 to throw into the stock market, Come on, TD. But that's my bone to pick with them. It's okay. Now, Schwab. Also have issues with Schwab. Schwab is a great robo-advisor, and they are very well known in the advisement world, and I believe they just bought ETrade, either Schwab or Merrill Lynch. One of them just bought ETrade. But I have issues with Schwab because, again, I like accessibility. I like for everyone at every level to be able to really invest and start building generational wealth and things like that. And so Schwab, although it has great perks and great bonuses and great things, isn't as accessible because they have a whole bunch of requirements. So let's get into the requirements, shall we? So the account minimum, $5,000, very similar to TD Ameritrade, and $25,000 if you open an intelligent portfolio premium. Bruh, please. And so the account management is $0 if you have the intelligent portfolio, which is the one that has the $5,000 minimum, and $30 a month if you have the premium. So obviously Schwab is, they're not really looking to be a part of the new investor world. They want, I guess, people who are a lot more established or people who just have higher sums of money. And they also have about 0.11% in fees. So although that's still low compared to more actively managed investment, it is one of the higher fees in the list that I'm going to be giving to you. So that's just something to keep in mind. But I like to talk about the good, bad, and ugly. So it's all fair game. ETrade, I speak of them so highly. ETrade, you have to have a $500 balance to start. So, it's not zero, but it's not terrible. I mean, it ain't $25,000, Charles Schwab. But yes, ETrade, you have to start off with $500. I like that there is a wide variety of index funds that you can look into, and so many stocks and options and things like that. And they really are really big and good on educational services for the marketing world. So you're learning while you're investing, which is so crucial and so important. So you learn to do it the right way that fits your financial needs or your goals and things like that. Now, what I don't particularly love, ETrade has a very old school website in the sense, so does Vanguard, in the sense where it's not approachable to like the Millennial and Gen Zers of the world. It's not like fun and friendly like Ally. It's not, it's not super cute. It's not aesthetically pleasing. It can be rather difficult to manage or navigate, I should say, finding different information. So that's the one thing I'm just like, come on, ETrade. Like, you have so many other good qualities. Why? Why the difficulty in technology and things like that? As far as their fees, they have about 0.07%. And they do charge you to transfer. So does Charles Schwab. I didn't mention that before. So when I left Robinhood, I transferred from Robinhood to Vanguard, and they transferred over everything for free, which is fantastic. Because some brokerages like ETrade and Charles Schwab, they'll charge you. And so they charge you about $75 to move you from one brokerage to another. So that's something you want to keep in mind because it is a little annoying, shall I say. And we have reached the end of our Robo Advisor chat. I hope these Stock Tip Tuesday videos are helpful. They don't get the most views, but I think they are very crucial to helping us build generational wealth. And I will catch you in the next one. Bye.